Hello, everyone. Good morning and welcome to this weekend's gold market analysis. What happened in the gold market last week is definitely worth paying attention to, especially if you are someone who values timing, market sentiment, and macroeconomic flows. So here's the big picture, especially from the technical detail we identified prior to the beginning of last week's trading session. So if you look at the structure on my chart, on my screen, sorry, you'll see that we kicked off the week with a strong bullish move right from that key level we identified at the 3,260 zone, as you will see here, and gold rallied all the way into the $3,360 zone. Now, the surge we saw here was largely driven by investors' concerns around the recently passed US tax cut and spending bill, which is expected to add a massive $3.4 trillion to the existing national debt. That sent the US dollar tumbling, and it is common understanding that when the dollar drops, gold usually rises. That's a classic case of inverse correlation. But let's zoom into the current structure to have a look at how price action behaved over the remainder part of last week. Now, despite starting off strong, gold lost momentum in the second half of the week as the dollar staged a short-term recovery. And by Friday, price action had settled into a tight consolidation between the $3,320 level and the $3,360 area, wrapping up the week with a 2.2% overall gain. So while buyers were in control, we also saw signs of hesitation towards the end of the week. Now, on the fundamental side of the equation, the US job report, the NFP, showed that the economy added 147,000 jobs in the month of June, way above market expectations of 110,000. And of course, we also saw the unemployment holding steady at 4.1%. Now, this right here puts the Federal Reserve in a tight spot. On one hand, rising government debt supports the case for higher gold prices. On the other hand, a strong labor market may give the Fed less reason to cut interest rate, which could limit gold's upside. Now, looking ahead into the incoming week, the trade tariff deadline, which is coming on July 9th, is the major event on the radar for everyone trading the gold market. If there is any negative trade news, we expect investors to run back into safe haven assets such as the gold commodity. We are also going to be watching some US labor numbers. For instance, we have the initial jobless claim count, which is coming in on Thursday, July 10th. And of course, we also have Fed speeches or commentaries on that same Thursday as well. Then we also have the FOMC meeting minutes coming up on Wednesday. Now, this will help us gauge whether the market is starting to price in rate cut or not. So, at this juncture, the big question to keep in mind is the market pricing in fear or confidence? That answer will shape what gold does next. Now, with all that in mind, let's look at what the chart is telling us. We will go through the key technical levels I'm watching together. We shall look at what price action reveals about the current market psychology, and we can use that insight to strategically position ourselves for the next big move. And before we dive in, just a quick reminder, everything I share here is based on my personal analysis and experience. It's not financial advice. Always do your own due diligence and trade responsibly. So, with that said, here, let's dive right into the chart. And of course, my first point of contact is going to be on the 4 hours time frame, where I took into account the character of price action in the last 5 to 6 weeks. So technically, I was looking at data from the beginning of the month of June. And after doing that, this is what I was able to come up with. The structure we are seeing here is not really different from the last week's technical detail. Of course, we had a descending channel, which is still very much intact, as you will see here. Where are my tools? Hold on a second. Okay, here we go. So you can see the descending channel right here after connecting the series of lower highs. You can see we have the resistant line of the descending channel. And when we connected a series of lower lows, we have the support line of the descending channel. Now, something interesting happened last week. We saw for the first time in about 3 weeks, price action broke out of the resistant line of the descending channel. And after the breakout, we saw a little bit of consolidation, which saw price come back to retest the structure. And of course, like I said earlier, we had a consolidation into the end of last week trading session. Now, for me, from a technical standpoint, this gives us a sign that buyers are likely getting stronger. And next week will tell us if this breakout turns out to be a true breakout or not. Now, to help me navigate the market around this area, my key level for next week is going to be at the $3,310 area. And look at how this level here had played a significant role in determining the direction of price action since the beginning of the month of June. And in fact, most of the time it had served as a demand zone. We saw what happened here. Demand zone, sellers found it difficult to break through. Price rose from that particular area. We saw the same thing happen during the third week of June, though price broke down that demand zone in, I think, 3 days to the end of the month of June. But as soon as we got into July, price broke above that structure and price still remains above that particular area, an area which beautifully shares a confluence with the resistant line of the descending channel we spotted last week. And of course, with this information here, you would agree with me that we are at a critical juncture where price remain consolidating around a temporary demand zone between the 3,310 and the $3,325 area. Now, the question going into next week is, will this temporary demand zone become a platform for the next wave of bullish momentum where price breaks out of the 3,360 to continue an uptrend scenario? Or are we going to see price break down that demand zone to incite a sell off? Personally, I do expect volatility around the US labor data and the July 9th trade tariff deadline. And as it is right now, gold is dancing close to a short term ceiling around this old consolidation phase you see here. So we could see a pullback, maybe if price can break down the structure into the 3,245 zone or the support line of that descending channel, especially if the dollar finds its footing. But if those macro fears deepen or Powell hints at rate cuts, we could see gold push back, maybe breaking out of the 3,360 to test the 3,450 zone and even aim for 3,600 in the coming weeks. So that's my in-depth look at this market. If this video helped with your independent decisions, give it a thumbs up and drop a comment below. In fact, I would love to hear what your approach is looking like for next week. And don't forget to subscribe for more analysis like this. Trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring the character of price action around this area, after which I will be giving you an update on whether I'm looking at buying or selling. So thank you for watching, guys. I'm looking forward to seeing you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.